Hi there folks, welcome to the EdgebyRS Academy. I hope all of you are doing well and are enjoying your weekend. For today's classroom session, I will be sharing an overview of the week that just went by. I will be talking about how you could have anticipated the moves one session, one day at a time. I will also be covering how I identified 5177 as a potential level where an excess could form. I'll throw in some insights on why I shorted at 5268 just after the CPI release. Similarly, why I went long at 5189 right after the PPI release. I think that was on Thursday. And thereafter I will dive into the intraday developments and the clues that were available to us that would ensure that we are on the right side of the trade. Now, since you guys have been watching this video, you will remember, and of course you're following my plans, you will remember how on 1st of April, the week of 1st of April, when I issued the ES Weekly plan, I was very clear that all immediate signs continue to point to an overextension and a back test of 5150, 5160s being due. So we had a very, very clear vision, and by the end of session Friday, we had met that target. Now, of course, that's just the first leg that I had envisioned. I will be sharing my next idea probably during this week. I've just taken a step back given we've got these headlines coming through. But again, I will be sharing my insights as the week develops and wouldn't want to get too carried away when there's a lot of volatility out there. So let's get to this. I'll quickly switch my screens. So it was a very, very straightforward week getting into Monday and Tuesday. And I say that because, as you guys recall, I've always said it is extremely rare that we will break out or break down ahead of the event. So if anything that is going to happen during that period is essentially cleaning up of any structure that has been left behind. So if you remember, on 5th of April, we had the NFP release. So what we knew is there is a potential, of course there's a chance, where we will retrace the NFP leg higher. So that's the only possibility we knew, and we knew that would materialize on the break of the balance stop or the buyer zone that we had marked at 36 and 46, that is 52 36, 52 46. So Monday, very straightforward, we had a 3-session confirmation, and what I mean by that is Asia, London, RTH, all 3 sessions held the balance stop, held the buyer zone, and ultimately rotated up 20 points. And of course, like I said, no breakout, and by breakout I meant in this case is a no push back above the prior inside week low, which is at 52.62. So we didn't have any breakout, kept rotating. But now, in that process of rotating, we left another, another magnet behind, which is equal lows at 52.46. Those equal lows meant that there would be a cleanup at some point in time, right? Now, as soon as we got into Tuesday, there was a pre-market pump rally into the open, and right there I called out a short at 52.72. Now, why did I call out that short? Very simple. Yes, we were above the balance. Yes, we pushed above 52.62. That is back inside or within the inside week range of 52.62, 53.21. But why did I drive that short? The reason is very simple. If you recall the session, the FOMC session, which was a Wednesday, the value area high was at 75. So for me, it was unlikely there would be a push above 75. Yes, there were single prints right above. I recognize that, but for me, that 75 was a well-defined risk. So at 72, it was a no-brainer, but to go for it because the risk was very much defined and I did not want to be long into the value area high. I would love to switch once back above, because again, if I switch at 75, 77, I still have got single prints all the way to 94, still giving me a good 10-15 point trade opportunity, which meant at 72 I need not take the risk of fighting right into the value area high. With that value area high in mind, we took a shot at 72. Of course, for some of you who are not part of Discord, here are the screenshots of our trades. Of course, not all of them that I take in the room, but at least the main highlights are here. We shorted on the 9th at 52.72. So the idea was very clear. We shorted, and why we shorted? We were looking for a cleanup of 46, which meant a move that could be right down into the balance stop and subsequently to retrace the NFP leg higher. Now remember this, go back, look at the NFPs of the past, since October 23. That's the example I've been sharing ever since. Plus, I think if one of those Academy posts, I've even shared some stats there, shown it to y'all with markings how NFPs have played out. So typically we retrace NFP, and that is precisely what happened. Yes, I did not outright expect that retracement. I thought 37, 35 would be it. But again, who doesn't like gifts from markets? So yes, we got that mini flush that took us there. Our runners took care of it, and we were able to bank a very, very good 30-40 point move. Next, as soon as we came down here, it became no-brainer at this point that there would not be any breakdown here. We defended a very nice excess low. That is what we were looking up, right? Every time, remember, when we have equal lows, poor lows, all we are looking for is a good, decent excess. And look what you get, a perfect excess low, which is as much as 12 points wide. Now that is a good excess low, and if it reclaims an important level, we are good to go. Precisely what happened, we held the zone. This has been a major pivot to us. 52.17, 52.24, and look thereafter what happens at London close. London closes exactly at 5225, right within around our zone, and look at that beautiful back test, and away she goes. So observe, London close defends, guides perfectly. London close right here on the 11th guides perfectly. Let's move on to the 11th, okay, and just give me a second. Again, London close here is at 51.97. Let me just quickly draw this up. I think I may have missed it. And there you go. If you observe closely, we had a nice little back test here on the 30 minutes. If I just quickly switch this chart to 15, you can see a good cluster of acceptance here at London close. Again, London close has been very important throughout this week. It had even been the last week as well, not the week just went by, the week prior to that. Again, very clean action around London close if it lines up at any of those key levels. Good acceptance here, continued to rally higher, again come back. So again, this was on Friday. Again, we had London close right here at 95, overlapping with prior day's London close. Again, observe, perfect rejection. So the London close has been phenomenal this past week and the week prior to that. And I again would like to remind all of you, please follow that London close, because it will guide you, especially when there is confluence around the levels that we have already identified or are already engaged in. So again, London close, good little back test here to join higher, and away she goes into CPI. So very straightforward Monday and Tuesday. We really didn't have to work very hard, just seek for those excesses. Again, it makes it a hell lot easier when you exactly know how the markets are going to play out, which in this case is broadly rotation until the event release. Now, remind yourselves, as we head into Wednesday, we had the FOMC value area high at 75. And what happened here on Tuesday late day? We rallied into resistance, the value area high. So at that point, and just give me a moment now, here you go, just ahead of the CPI. I had said 3 scenarios with the team. Look at the third one. Tests 89.94, fails back inside 72.75, indicates failure to find acceptance above FOMC value area high plus inside day top, which is bearish but needs to validate at 52.36.46. If slices through 51.94, cleanup is next. So as you recall, we had again a cluster of lows at 51.90s, weak lows, equal lows. We were looking for an excess, and is why I had said watch for an excess at 51.77. I will just share with you in a bit why I picked that level, but before which, that's one reason. As soon as we had this spike up, I was instantly clear any failure, and I want to be short, and I did take that short. I called it out live. I shared my trade entry with you all, even that I was short 52.68, and there you go, the flush right into the excess at 51.77. Again, I hope so far you guys have been able to follow how I literally made up the story that was there. I put those pieces of the puzzle together, and there you go. From Monday up until Wednesday, we were able to navigate without any problem and successfully and profitably. And again, as you guys know, I don't like to take many trades, so I stick with 1, 2, and I recall that on Wednesday, I had pretty much called my day off. However, there you go, down at 51.77. We got a very, very nice excess, but remember, this excess was formed during ETH, not RTH. That is an important clue. When does market bounce? Where does it bounce? What's the time? What's the level? All of these things really matter when you are trying to assess the strength of any move. So when we saw this excess, I was very quick on Discord to tell you guys, this is ETH, this is not RTH, which means RTH at some point will want to revisit 51.77 at minimum. And again, recall, until this point we hadn't hit my target, which is of 51.50, 51.60s, which meant downside is still very much active. Again, intraday action, look how we converted this support into resistance, pivot turned into resistance. We had a textbook list framework right here confirming shorts, and thereafter the London close did the usual trick by holding below. Now, let's take a step back. Let's go back to Wednesday when you all were trading. A lot of back and forth. Everyone is looking for a move lower or a move higher. But at this point, you want to remind yourselves, why? Ask yourself, guys, always ask yourself, why? Why will there be a move now? And the quiet answer is, not yet, because we've got the ECB and the PPI release tomorrow, which means there are still more events to come. Markets are not in a rush or in any sort of hurry to make a move, which means it could endlessly chop. So with this Y, again, look at this note right here. A lot of order flow traders at this junction would have told you passive sellers are present, there's a ton of absorption. But nobody would teach you the why, because it's very important to understand why are we having this range bound action. What does this action mean? You see, it is only after the fact a lot of traders will tell you, oh, this was passive selling, passive sellers failed, and there you go, there was a short squeeze. But hey, wait, we were one of the few who actually called out the long at 51.89. I took the trade myself. There you go. I shared my entry right here. I called it out. I'm long 51.85. Sorry. And I was very clear. But why? You see, this is important to understand. Because unless you don't have the answer to why, just by knowing this is passive selling, aggressive selling, it makes no difference. Absorption doesn't make any difference. You must understand the why. And the why was very evident and clear to us. This is the wait mode, like we had on Monday. And Tuesday, of course, Tuesday was a little less wait mode because they wanted to retrace NFP. But broadly, wait mode ahead of the CPI. And we went and parked pretty much back to the highs of Monday ahead of the event. Similarly, ahead of the event, look what happened this time. We parked at the lows of the CPI. There you go. Into the bargain level on Thursday and into the most expensive level on Wednesday. And there you go, you see the two extremes, and there you go, you have what everyone would then say is a short squeeze. But we foresaw this. We exactly knew this was coming. Why? Like we know, the NFP move was due a retrace at this point right here, when even though we didn't have the PPI and the CPI, we also knew that the CPI move is due a retrace. Does it need to be 100%, guys? Not at all. Always go with the 50, 60, 70% retrace, you're done. You don't need to always be aggressive. Oh, I need to get to the very last point of the CPI high or low. Not required. That is a job of runners. But broadly, your idea is we are going to retrace. So you have a move, and there you go, ahead of the event, right into the bargain levels, into the CPI bottom, into 51.77. We had our long. Now, what's interesting here, guys, is just a second. What's interesting is we had a nice pop where right into the supply zone now, resistance again at 52.17.24, and it flushes lower. Now, if you took this trade, fair and square, amazing trade. But now this is your awareness, right? When you took the short, your target is a cleanup of this excess, right? Sorry, your cleanup of this equal lows right at 51.77, which, by the way, printed both during pre-market and not RTH, which means we cannot yet trust this excess. We cannot trust that this is where the buyers have stepped in. We know it is due a revisit. If not today, maybe the next day, but it is coming. So, as you were short, your first target would be to see what truly happens at the IB low, which is the end of the first hour. Can sellers accelerate enough? Which means, do the sellers here, right here, have the strength to break below the CPI low and the PPI low during RTH session? And the answer was no. Sellers had the entire hour, they failed. Instead, they found a higher low right here at 51.82, and that itself was your clue that wait, the tilt is now with the buyers and not with the sellers. And look what happens thereafter. ES starts to one-time framing higher. So once again, we had that one-time framing higher. These are real-time developments you got to watch. These are your clues that come by apart from the levels that I have shared. And that one-time framing up meant only one thing to you guys at the moment. get above London close and this will rip apart. Why? Because now, observe, how does London close behave? Every time it acts as either support or resistance depending on the direction of the move. And in this case, London closes at 97. We start forming action like I showed you earlier on 15 and 5 minutes. The action starts to develop above. We know a ripper is coming, and I understand, and it is very fair for you to think that 52, 17 and 24 is still resistance. But remind yourself, test 1, test 2, test 3, test 4, it's defended 4 times. It is already weak, and look at this, each time it knocked, it failed to make a lower low, which meant sellers here are lacking the fuel. And look what happens on the next test. Very weak pullback, but pullback that holds the prior day's London close at 52.09. And that is it. That is the deal. That's sealed the fate of the markets, that it is set to rip higher. And boy, did she rip higher. Right? So this is how you want to think. And again, end of day. And now at this point, right, as we ended this session, again, another step back, guys. What is this move? Is it bullish? No. Is it a short squeeze? Forget about it. This move is nothing but a retrace of the CPI flush. That is all it is. Similar. This move was not bearish ahead of the event. This move was not a breakdown. This move was a mere retrace, and that is all it did of the NFP, and that is all it has done again in respect to CPI. And there you go. As we got into Friday, the balance stop started acting as resistance, right? We had the buyer zone not really finding traction, and eventually into London, into pre-market, the balance stop turned into resistance. All 3 sessions once again came together, confirming weakness. Now, this is an event-led move on Friday. What is the event? We've got headlines around from Israel, we've got from Iran, we've got those headlines. Now, let's see how things unfold. But again, what do we know about Friday's move, guys? It's an event move, which means let's not be surprised, rather prepared that this move at some point will retrace, if not in full, like I said, at least 50, 60, 70%. And those are the good 20, 30, 40 points that you would have banked without any problem, without trying to fade it. And then let's use MGI to guide us whether it was a mere retrace or is it something more meaningful. So always keep in mind that we've still got single prints up above, which means anything meaningful that gets back above 36 might target at least one set of single prints back up again. But that's for later. The first thing comes in, retrace of this emotional sell-off. Now, of course, the good bit, like I've highlighted already in the weekly plan, is that we had a double distribution day up, and again we had a double distribution day down, which means we've got essentially nothing to do, nothing to think about, and just use the edges of our anchor balance, use those double distributions to target single prints back above and play those rotations by using your runners, your position size to trim along the way. Again, let me not go too deep into this, but again, let's go back to Friday and observe how the open is in the lower distribution. So yes, we had a double distribution day up. If the markets were strong, if there was anything meaningful, guys, we would have held the upper distribution. But instead, the fact that we retraced CPI and thereafter London, Asia, US pre-market all took us down into US session open back inside the lower distribution from Thursday was a clear signal by the markets that it is a screaming sell. At this point, what's the magnet, guys? the equal lows at 51.77, and there you go, you had your flush, you had again initial balance low, sellers accelerated, thereafter you wanted to see what London does, and there you go, perfect textbook back test, and there you go, ES flushes right into support and pops for 13 points. So at this point, guys, as I walked you through the entire session, entire week by the way, again, before you guys, those who are not part of Discord, have any sort of misconception, we took those trades, I called them live. Again, I've put screenshots here for your reference. We were long here. Again, we took a short here on Wednesday. Again, we were short here at 52.72. We were short at 52.68. All of them live calls right there and then. And again, like I showed you for CPI, I had said look above and fail, will flush and clean up the equal lows at 51.94. Exactly, that's what happened. On Friday, I don't typically trade, but I always have my runners active from my existing positions. So my need to engage every single session is very, very limited. That said, this is how we could have read the week. Again, I was updating on Discord, so you guys had that advantage. But now I hope this story is much more clearer, and we will apply the same story next week. I don't know how next week opens. I don't want to even get into those predictions. It's just a waste of time. But what I can tell you is, event-led move will retrace. All we have to do is wait. Wait for that acceptance. Wait for that confirmation through sessions, through the list framework, and there you go, you know what your ultimate target will be. Now, why did I pick certain levels, right? The last part of this recording, why did I pick certain levels? 51.77, go back in time, guys. 51.77, look at the H contract if I'm not mistaken. 51.77 was the CPI release high, not the session high, but the release high. So it was very clear for me that CPI rejection, any CPI rejection, would go back and rotate down to the prior CPI range in some format, and which brought about 51.77. Also, another confluence is, since that FOMC value area high at 75 was an important level to me, and since you guys know my exhaustion stands at about 108, 117, I pulled up 100 points, 108 points from there, and it took me right into 51.67, basically back inside that CPI release range. So that made 77 very important for me. Plus, like I say, like I've always guided earlier, any form of good excess low can be in the range of 10 to 20 points, which means given that 51.94 is where we had equal lows or a weak low, right there, if you do another 10, 15 or 20 points lower in brackets, again you will realize that we get into the region where we can look for a swing low. So again, that is the thought I had in mind. Again, I thought ahead of the curve, I thought ahead of the time that if there is a drop, this is where we are going to find an excess. I was prepared, I was ready. So when this drop actually materialized, I was ready to pull the trigger and explore along. And guys, that is how you want to always think one step ahead. On Sunday, I did not know that we would drop into CPI, and that's the fact. But as we got into Monday, Tuesday, the picture became clearer. We exactly knew how the puzzle was about to unfold, and there you go. Everything that you planned for, you were prepared. So I hope all of these notes, you guys must review them again, understand how I went session by session, list framework. Again, these were live callouts, so there was nothing that is hindsight here. The entire purpose of these recordings is to show you how to think and to show you that once you are prepared, once you have confluence that is there, then you are in a much better position to maximize your participation of key levels. And of course, how the idea of repeating the same concepts over and over again, week after week, just makes trading a tad bit easier every week. So again, there you go. All these notes extremely important, and we essentially managed to have a very, very successful week. Now, I had promised I'm going to talk a bit about next week. It is a bit complicated with those headlines, but again, I would say just let's forget that there's anything called headlines, because that is nothing but volatility, right? Tempo. That is what we get with these headlines, is speed of the move, but markets will still respond where they respond at those levels, plus or minus 5 points maybe, because of that volatility. Now, just recall that we have got a poor low from the edge contract. Yes, I carry them over into the new contract at 50.60s. Okay, so this is what you want to remember, that at some point cleaning up that poor low is just a matter of time. I'm not telling you it's coming next week. All I'm telling you is remember those magnets, like how we had to know 51.77, 51.94 would clean up, or right here 52.44s would clean up. It's the same way 50.60s needs a cleanup, and that's what you want to be ready with. Now, what we also know is that the prior contract, which is the H contract settlement, which is at the time of rollover, was at 51.29 something. Just a second. Right, 51.29 right here marked on the chart. Now this is where typically we observe, and it even happened at some point last year, where 43, I don't know how many of you recall, but you may have to just look left to last year, where 43.10s, if I'm not mistaken, was the settlement of the prior contract back then, and ultimately ES did trade down all the way, and upon the cleanup there was an excess formed and buyers stepped in. I'm looking at a very, very similar development right here, unless, like I said, if there's a headline and we are breaking through, we are breaking through. Don't try to challenge that, but on a normal day, steady, I would really expect some way here support to kick in, because right at 5114 we also have an event low. I don't recall if it was CPI or NFP from the H contract. Again, look back. This is your homework. This is how you do it. I'm not going to spoon feed you everything, but again, look back, and that is where we have an event low. We have the settlement right here, and if you recall, 51.20 is absolutely critical in the H contract. Again, look back at the charts that I've shared with you, and you will realize the number of tests we had back then. So yes, by default, I would expect some defense here. And again, once that defense goes, we know the likelihood, the 100% extension of the 3-week balance drops right into 50.60s, which means we are likely to clean up that poor low. So I would really use this region right here to guide me, right? And more importantly, I will use the same 51.77 telling me that if there is acceptance here, again, post Monday, Tuesday, thereafter, I don't know how Monday even opens, but again, if there's sustained acceptance below, then we're really likely to go down all the way and clean up this poor low. Yes, we could have a bounce here, but again, what really happens at 51.77 will really start giving us those early hints as to how the rotation is developing. So keep your eyes at 51.77. Keep it at 94, the level which was also pretty much magnetic before the breakdown occurred this past week. So keep an eye, and we will have very clean rotations to the upside, and we know this is an event-led breakdown, so we are looking at it. And if at all, early on Monday, if there's a gap down, I would at some point really look to buy that gap down for a reversal, because in my history of trading, it's not very long, just 12 years, but I've often seen anything that's related to geopolitics tends to retrace within 1, 2, or 3 sessions. And of course, broad market awareness is important and managing your risk is critical. But those sharp V-shaped recoveries do take place, even if there's an early emotional selling or liquidation break that we may come across. So just keep these broad ideas in mind. Your magnets are clear, rotations are clear, and all these edges will be in play once again. Don't fight the trend. Think of it as V-shaped recovery unless we are done with that V-shaped recovery and start to rotate lower, absent any headline, and there you know that the trend lower is confirmed and it is just not event related, it is developing into something more meaningful. So it's very important to split any of the pullbacks into, is it event led, what sort of event, did we get a V-shaped recovery, that is if we got a retrace or not, right? Of course, in this case, in this context, we are talking about V-shaped essentially to the upside, but of course we also get things that correct to the downside if you have any event candle that is untested lower, something that we saw right here in the event of NFP. So we did have to flush a bit lower. So something like a M shape is what you see. So these are two patterns that I watch. Obviously not something very concrete, but something that if you do see in and around events, you will have a much clearer and better perspective. So that's all from me, guys. I hope this was helpful. Again, make lots of notes. Look to apply these in the week ahead. Come back to me with questions, and anyone who sent me an email, I will get back to you just in this coming week. I've been flushed with Discord members and their questions, etc., trade reviews, but I will get around it in the coming week. So again, feel free to drop in an email, send me a Discord message if you're on Discord, Twitter, anything is fine, and I will get back to you. Okay, and I wish you a successful week ahead. Please keep your size down if you're not certain. Let's just do this right. Every week doesn't need to be a week where you make millions, let's put it that way, but at least just make sure that you're steady and you're doing good for yourself, okay? Take care. Bye-bye.